you hear about all the stories about Airbnb, mostly we're hearing about doom, oversaturation, collapse, investors jumping ship, and everybody failing. Here's the truth that no one's telling you about Airbnb investing right now, and exactly why it's one of the best moves you can make this year. Stay tuned, because this one surprising insight might save or make you thousands. Hey, if you don't know me, my name is Matt McCall-Stillman. Nice to meet you. And I've turned my $30,000 initial investment into a $10 million short-term rental portfolio. With over a decade of experience and an 8-figure Airbnb portfolio under my belt, today I'm going to teach you whether or not it's worth it to build an Airbnb portfolio in 2025. So what is Airbnb investing? Airbnb investing is investing in real estate and hospitality. For anybody out there that has already dealt with a rental or rented a property, you had a landlord. That landlord bought the property, rented it to you for a price that was greater than what the mortgage price was, right? So let's say the mortgage was $1,000 and let's say the rent rate was $1,300. They were netting $300 a month on you, and that's how they made profit. The biggest difference with Airbnb and long-term rentals is the length the contract exists. With long-term rentals, it's usually a year or longer. With short-term rentals, it's usually less than 30 days. And if you're into midterm rentals, it's usually greater than 30 days, but less than a year. So what makes it different? It's two things. It's the fact that it's a furnished rental and it's a shorter period of time. So why would you even want to invest in an Airbnb versus a long-term? Sounds like the long-term might be more stable. It kind of is from a few different perspectives, but I can say this. There's a reason why a lot of long-term rental investors have finally made the change to say, I'm going to go all in on short-term. That's what I did. I changed my whole portfolio and I kept buying more and more ever since then because it just nets me more dollars. And that, quite frankly, is the answer. It usually nets you a minimum of 100% greater net profit than a long-term tenant would have offered you. Over the last few years, we've seen a lot of popularity and movement toward Airbnb. We've also seen a lot of people crap on it because they're like, Airbnb is BS. I had the worst experience, blah, 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 blah. Jerks. Typically jerks, and typically bad hosts. So in this video, here's what we're going to cover. The current state of the Airbnb market in 2025, the strategies the top investors are going to use to thrive, and number 3 is my verdict for where and how you can be successful in investing this year. So let's talk about the Airbnb market in 2025. So just last year in 2024, we actually saw a rise in demand by over 10.7% versus 2023. So while we've heard about these concepts of Airbnb busts and how everything's getting saturated and we can't be successful, blah, 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 some truth, but not all truth, because I want to introduce you to a concept that I hope this kind of gives you an idea of what I teach. There are 2 types of saturation. That's right, there are 2. There's not one type of saturation. There is saturation of quantity and there is saturation of quality. Let's say you check out this one market and there's 10 very similar sized cabins, similar design, similar reviews, and they're all in the same lake, right? And you're like, which one do I stay at? Kind of like the same when you're going to go stay somewhere that has a bunch of hotels. You're like, how different can they really be? They're not going to stand out. So if you see 10, and you go, you know what? Not only do I want to stay there, I think I want to invest there. Maybe I want to buy one. But now you're adding an 11th of the same type of cabin. They're all 3 beds with 1 bath. At that point, you're creating saturation of quantity. Now, what if you looked at that market and you said, they're all kind of average. There's no real theme. There's no real styling. But what if there was something a little bit special? Maybe some amenities. Maybe, you know what? Nobody really has a good cleaner around here. Maybe I can train a better cleaner. You know what? The marketing on all these is kind of bland. Maybe I do something. I title it and I make it a whole like cool vibe about stay at this special getaway cottage, this chic cottage lakefront getaway. Maybe you make it something really fun and really interesting. So here's a really big lesson. Don't expect average numbers to give you exceptional results. That's right. If you're going to do something that's exceptional, something that's really special and ahead of its time or just against the norm of what currently exists in an area, if you're going to do something special, do it. And you're probably going to get an exceptional result. I know a lot of people like to go where their data is dense. And I know we've been hitting on the benefits of using some data, but the truth is sometimes that data is going to gridlock you out of a really great opportunity. So I want you to really pay attention to the emerging markets this year. The emerging markets are where you can still make a lot of money. You can still do a massive ad value and still have potential to exit at a positive. Now, a lot of people I've been hearing from in the Smokies, they invested at the top of the market where everything was already hyper saturated with quality Airbnbs, and they are not really hitting their marks. And now they're trying to sell those properties to go repurpose those funds into other markets that have a better shot because they just nearly wasted all of their savings on bad investment properties, which is one of the most terrible feelings you can have. And that's of course something that we go out of our way to make sure that does not happen with our coaching students and our clients, because we try to vet every property as best we can, and we try to always put ourselves in your shoes. So when it comes to the saturation of certain markets that are actually quality, just beware. So let me give you a little example. Let's say somebody says, hey, I want you to do a race for me, and if you win, you get this house. And you go, okay, sure. And what kind of race? And like, it's a Lamborghini race. And most people are going to be hitting 150 plus miles an hour, and everybody else is experienced, and you can win this race. Now, you're probably not a professional race car driver, so more than likely you're going to get killed. You're gonna get smoked, and it's a bad move. I don't know why some people want to jump into the deep end with these really tough, very complicated markets and properties before they've ever had a chance to actually operate any kind of short-term rental. I think it's kind of dangerous. Pick something that you can feel okay with and is not going to put you or your family at risk of being homeless. These are not small investments. These are big deal investments, but I promise you, probably over 80% of you can be successful at it. And with the right support and coaching, probably 95% of you can be successful. All right, let's hone in on this. What separates the winners from those who are actually struggling? It comes down to 3 key strategies. Number 1 is going to be hyper-targeted niches. Let me give you a couple examples. We've had a few of our students that have done some things that are exceptional, and a lot of people weren't willing to do them. But because we're good at identifying those niches and how to be superior in a market, and maybe even make it hard to compete with them, some people describe that as building the moat around your building. That's how you really set yourself apart and make it harder to compete against you in the future. Because a lot of people need to focus on the longevity of their investment. And that's exactly what we need you guys focusing on if you're going to be doing this in 2025 and beyond. So one of my students got a 6-bedroom house in a wine area. And he said, you know what? We're pretty close to the water. It's a really good size house. It's a beautiful lot, in-ground pool. He did a bonfire pit, and he's hoping to add a pickleball court as well. He's got a movie theater, game room, all these things. He just launched last month, and he was able to book over $20,000 in his first launch week in 48 hours. Talk about a kick-ass start, right? I mean, who wouldn't want that? Secondly, professional grade listings. And I think that a lot of people misunderstand what that is. They think, oh, it's listed. There's nice enough photos. That's not it anymore. You need to be exceptional. You need to think, what would the top hotel brands do? What would the top Airbnb owners do? That's what you need to be doing. It's no longer, oh, no, it's good. It's good. I took these really cool photos with my iPhone and now I'm very happy with it. No, if you're afraid or like trying not to hire out a professional photographer, specifically an Airbnb photographer, you're going to hurt yourself, because what is the first thing people see about your Airbnb? Let me tell you something. It's not your house. They need something that gets them to your house, because no one's going to go check out 7 Airbnbs in person and go, this is the one for me. No, it comes down to your listing. If your listing is not exceptional, if it does not kick ass, you're going to lose. You're going to lose that fight. And you need to be ranking. You need to make sure that the photos are really connecting, the descriptions are clear, any of the things that are accommodating or helpful to know about the property are obvious. Those are the things you want to do. And there's a couple other tips and tricks that you can use to make sure your listing is always getting looked at. People are always going, that was memorable. That was awesome. I think I'm going to want to stay there. How do you differentiate yourself? Let me give you an example. Kissimmee, Orlando. Oh my God. Go look at anything out down there and they all kind of look the same. Some of the homes they're nice. Pretty much all the homes are nice. And a lot of them have the Marvel and the Disney themes. But what really differentiates one versus the other? What is the one listing down there that makes people go, holy crap, did you see that? I gotta stay there. This is just exceptional. And that's what's tough about being in super saturated markets. They're so dang good across the board that it makes it harder to stand out. You have to come up with ways to be smart enough to go, this is my business. I'm a business owner. I am a real estate investor. And this is how I'm going to differentiate myself right now to make sure that I stand above the cream of the crop. And lastly, you have to have a backup plan. And listen, I know some people argue that it's not good to have a plan B. That means you're not focused on plan A. And that's kind of dangerous if you're not paying attention to the market and the economy that is at play. It is good to understand if your property can still function as a long-term or mid-term rental. It is good to make sure that if you've added value, you can exit at a positive rather than a loss, because there are costs associated with selling your home. And there's a timeline. Now, overall, most people know to hold on to reserves. And more than anything, I will say if you are buying in a set up, established market, typically it's going to be a little easier to exit that property because you're in a more saturated, populous area. So when you have a really great property that effectively already has amazing listing photos, it's an attractive property, people are going to go, hey, I would like to buy this. And somebody's probably going to come along and buy it. But the truth is, if you're in a very remote area where maybe it's not as attractive to live for a long-term owner, or you're on a lakefront market and you're selling in the winter, that's a tough position to be in. Or maybe you're in Colorado and you are dealing with a bunch of $2.5 million homes near your home, and your home is now a $2.5 million home because it's appreciated so substantially. People don't buy $2.5 million homes that quickly. Now, $250,000 to $500,000 homes, those move pretty quickly. So the price range at which you're operating at can be a determining factor too. Let's recap those 3 key strategies that smart investors are using to thrive in 2025. A beyond exceptional listing. Everything must be thought out and executed. There can't be any give and take on like, oh, I'll do a little of this, a little of that. No, you got to kill it. Number 2, you have to be super effective and intentional with how you are marketing your property and what you're doing to improve it above and beyond the competition present. What I'm saying is, let's say you already have a property in play and you've been noticing your income's been dropping, and you think, oh my God, I guess Airbnb's failing. That's wrong. That's absolutely ignorant. You need to look at what's happening. Oh, it's possible that your competitors are outperforming because they are outperforming you as a property, as a listing. Maybe they're better cleaners, whatever it is. If you look at what they are producing and why they are so great, then yeah, maybe that's the sign. Now, if you have a 3-bedroom, everybody else has 4s, 5s, and 6s, and you have 1 bathroom, everybody else has 2 or 3 bathrooms, it's really hard to improve that property to be long-term beneficial. But if you already have a good sized property and you can improve with the amenities, the design, or you can get some new photos done to improve the algorithm or the visual appeal of the listing, there's so many ways you can approach that, but you have to be willing to pull those triggers and really do some deep diving and be honest about what you're doing right and not doing well. And number 3, whenever possible, have the backup plan. For me, one of the ways I like to do that is the BRRRR method. I buy it, I rehab it, I rent it, I refi it. And because I've done that, I'm forcing appreciation and equity into the property. I'm buying a property at a lower price and I improve it to a point where it's absolutely satisfying. And people go, this is a cool house. Of course I want to stay here. Maybe I'm adding a bedroom or bathroom. Maybe I'm adding some amenities. Whatever I'm doing, I'm forcing the value so that when somebody looks at this house, they're going to go, oh my God, it's a really great house. I got to at least rent it. And worst case, if it's ever available, I want to buy it. That's how you do it. The question that every influencer and Airbnb coach and operator has probably asked or said or made a post about, is Airbnb still a good investment? So for me, it's an absolute yes, with of course a couple caveats. Those key considerations are 3 things: market selection, realistic projections, flexibility. Pick a market you feel comfortable you can operate in. I remember this one time I bought a hotel in the desert. I should not have done that. I was not ready for that market. It was a really tough market to operate in. Don't recommend jumping into something like that if you're not comfortable operating that far away and that different of a market. I'm used to forests and lakes, and I got to tell you, desert people are a little different to work with. That was a challenge. And additionally, when it comes to market, make sure to be careful of those super saturated areas where there's tons of quality operators. You're not going to probably come in there on your first go and win that race. Realistic projections. Now, some people will say to you, oh, this home's going to do 100,000. You're like, oh, great. I'm going to go do 100,000. It doesn't work like that. That person might have been experienced, you might be inexperienced, and you could hit that number, but more than likely without the right support, you're probably going to miss. And if you are going to miss, that could be really painful. Let's say you hit 80% of that. That's pretty good, right? Now, on a $100,000 gross income property, it should be under a $500,000 purchase. Now, if that is the case, let's say you buy the $500,000 and you have $100,000 gross expectation, the holding cost on that property is probably $4,000 a month. So let's call it $50,000 a year total in just mortgage payment. Let's call it another $500 a month in utilities. So that's $6,000 a year. So $6,000 plus the $50,000, right? So that's $56,000 in holding costs already. And then you got to add your cleaning fees. And the cleaning fees could easily be another $1,000 a month. So let's just call it $12,000. So you're at $68,000. So if you end up at $68,000 in costs to run the property throughout a whole year, and you're only going to make $80,000, $10,000 a year is really just buying yourself a job. So my point here about realistic projections is, so you got to know your range, at least realistically, but if you can't hit that number and it's going to leave you pretty much flat, it might not be worth it. On the other side of that, you could go, hey, I'm making $10,000 a year and I learned a lesson. I still got a beautiful property that's appreciating. As long as you're being realistic, it could still be a win. And lastly, flexibility, which is really coming down to adaptability. As you grow, as you do things, even I've had properties that start to kind of level out and plateau and I go, ooh, that's not really doing as well as I'd like. Now we're under $1,000 a month on this one property. Do I want to keep it? Should I just kind of roll the dice on it? Should I sell it? It depends. But sometimes you look back at that property and you're like, hey, could I do this better? Is my income dropping, or am I just doing a bad job? Or is there better competition? Go evaluate that property and be adaptive and flexible enough to make those changes if they're available. I want to share a special story about one of the members in our group. She ended up buying a property that was having a couple issues. She came in literally as she was closing the property to our group. She's like, what do I do with this? How do I handle this? And I was like, well, here's how we can negotiate that. I gave her some tips. She ended up closing the property generally a little bit better than her current agent was leaving her off with. We gave her a couple ideas. We gave her some direction on how to set up her property and the listings and the type of rehab that she should do. And she absolutely crushed it. She went above and beyond what I expected her to do. She was an out-of-state investor as well. And before we knew it, she was getting booking after booking. And it was tough because when you join coaching, you have to have a vulnerability. You have to be open. You have to be coachable. And I have to be willing to say, hey, I've got some news. I've got some constructive criticism. I think there's a better way to handle this. How about try it this way? And sometimes with some people, it doesn't land well because they're very sensitive. This is a creative adventure for a lot of people. And that's one of the best parts about Airbnb. It's not just the house. It's not just investing. It's not just hospitality. It's about creative and finances and changing your life and your mind on how you're going to exist as a person in this world, about flexing your abilities and strengths as an entrepreneur, getting out of the grind of the 9 to 5, right? That's what's so special about the whole thing. So what's your take? What are your thoughts? Maybe you have an Airbnb. Maybe you're thinking about getting into it. Maybe you have multiple. Do you think it's going to be worth continuing to invest in 2025? For me, it's a definite yes. I got 2 weeks left on finishing up my flip that's then going to be converted to an Airbnb. I'm really excited about it because it's in a city I already operate in, so it's going to be pretty easy. And then we're going to be moving on from that project. We're actually going to go see it in a week from today, and it's going to be another hotel. So hopefully that pans out. We can get the negotiations with the seller worked out. And at that point, we'll be able to share the new adventure of buying our second hotel. So if you have any questions about Airbnb, or you're wondering, hey, should I be doing this? Am I a good fit? What do I need to look out for? Drop us a comment. Let us know what you're thinking. Let us know about your questions. I love answering these things, and sometimes it gives me great stuff to come make a new video about. So if you're serious about getting started and scaling with Airbnb and you're looking for all the right answers that are going to help you, your family, your finances, and your freedom, that's what we're here for. We have an Airbnb course that you can enroll in for free. At the surface level, when you enroll in the course, it's going to teach you about the benefits of scaling and how you can do that and the compounding effects of that while incorporating some of the ideas of velocity of money. I think when you start to understand the financing elements and how it's actually attainable, even when you're starting off with as little as $30,000, it's pretty awesome. And again, this is what's made it possible for me and everybody who's joined my course. All my students have been able to grow their portfolios and their mindset as business people as well as real estate investors. This has allowed me and many of my students to make between $3,000 to $15,000 a month more in just 90 days. The reason we made it free is because I think people need a shot these days. If we can get you making $3,000 to $15,000 more per month within the same year, maybe even 90 days, that's going to change everything, right? If you're looking for it, just check the link in the description. You should be able to find it pretty easily. And please don't forget to like and subscribe. It really means a lot to me in this channel. We want to grow. We want to get the word out. We want to build some people up this year. We'd love to do that with you too. Again, my name is Matt. Have a great 2025, and I'll see you in the next video.